What's going on, everyone? My name's Obi and welcome back to Courtside Financial. If you're new to the channel, make sure you hit that subscribe button because NIO is very well documented on this channel, and also make sure you hit that like button because it really does go a long way in helping out the channel. Today we're going to be talking about NIO. It's currently 12:18 p.m. on Saturday, so the market is closed, but the stock is trading at $44.56, and as of Friday it was down 7.74% and down 2.11% in the after hours. I think the times we're in right now are a reminder to people that stocks don't only go up. We can talk about the reason why NIO fell, but for me personally, I try to understand my time horizon and my investment before I actually invest in it. A lot of you were asking me to cover this topic, so the news is that Citron Research, a short selling firm, actually went bearish on NIO for the near term. I think one of my favorite things that Ray Dalio ever said is that he's in a business where you have to bet against the consensus and be right.
I'm in the investment management business that you have to bet against the consensus. And you have to bet against the consensus and be right.
Ray Dalio, for those of you who don't know, is a legendary investor, and his firm, his hedge fund, Bridgewater and Associates, is the largest hedge fund in the world. We're going to come back to the organizations and people who hold large positions in NIO because the list isn't scarce, but let's actually get into what Citron actually had to say about NIO. NIO's ES6 hatchback model faces imminent threat from likely price cuts from Tesla's Model Y in China, said Andrew Left of Citron in an investor note. Left has long targeted companies that he thinks are overvalued. Friday's take is a reversal to the firm's original recommendation 2 years ago when it urged investors to buy the stock. Anyone buying NIO stock right now is not buying a company or its prospects, rather you are buying 3 letters that move on a screen. Tesla has cut prices in China on several occasions, aiming to gain more market share in the world's biggest car market. Currently, the China-made Tesla Model Y has an estimated price of 488,000 RMB, which is around 73,895 US dollars in the country, according to Tesla's website. Now, Benzinger responded to Citron's report by saying, "There is no question the Chinese EV market will be a major growth story for years to come, but NIO's market cap has now surpassed Daimler's despite the fact that NIO sells roughly 5,000 vehicles per month and Daimler sells about 1 million vehicles per month." So right off the bat, it seems to me that Citron's bearish thesis is flawed. I have spoken on the fact that on paper, in the near term, I do believe NIO is overvalued. But let's be honest here, competition with Tesla is not a zero-sum game. NIO is a growing product in a growing market. The automotive market is not going to only select one product. In my opinion, people are going to choose multiple cars, and there's more than enough room in this market for multiple players. So for Citron to base their short thesis solely on what Tesla is doing is just invalid. In the past, my thesis was that demand for Tesla is likely to spur demand for NIO. And well and behold, a few weeks later, CEO William Li came out, and I believe this was in a Bloomberg interview, where he said that Tesla has actually been more of an ally to them. As Tesla sales increased, NIO sales increased. I just watched an Xpeng interview as well, basically the same thing, right after their earnings.
Brian, Tesla is, though, lowering the car that competes with your P7, the price of the car that competes with the P7. How problematic do you think that's going to be with that Chinese-produced Tesla?
Well, I think Tesla is certainly a very worthy, competitor for the Chinese EV players, including XPeng. Their Model 3 is selling very well in China, particularly after domestically made Model 3 lower their prices. But I think the phenomenon actually turbocharged this market development for EV, as a smart EV for that matter, because more and more gas engine, drivers are now switching to smart EV because I think the education provided by Tesla and the other players. So I think in terms of competition, definitely, we, welcome better products to be available in China, and we certainly, think our product P7 has certain advantages over competition because it's smart features locally developed. But overall, I think the better product in China will overall catalyze the conversion from gas engine vehicle market to EV market much more quickly.
Andrew Left of Citron says that NIO's ES6 sales are likely to be in danger because of Tesla's Model Y and price cuts that are more likely to come in the future. The ES6 and the ES8 are both the best-selling pure electric SUVs in China. But I think that the EC6 is what's in direct competition with the Model Y. There isn't going to be only one pure electric SUV selling in China, and I think that the Model Y, with Tesla having the big brand presence that it has, is actually going to help boost demand for the EC6. NIO doesn't have to be number one at this point in time for the company to actually start gaining market share in the automotive market and start making money and still be a winner. Yes, Tesla is a profitable company, so they do have the luxury of cutting prices. But the Chinese government also supports the sale of cars with swappable batteries, and they have a vested interest in NIO. For the EC6, which is the Model Y competitor, there are 3 variants ranging from $52,000 to $75,000 before subsidies. So we're going to have to see how this thing actually plays out. Bailey Gifford still has a $300 price target for NIO. BlackRock is invested in NIO. Tencent is invested in NIO, and they expect to get a return on their capital. None of these institutions are just putting their money to work and expecting to lose it all. Mind you, William Li wants to remain a billionaire as long as possible as well. And back to Benzinga's comment where they compared NIO to Daimler. Well, NIO is not just a car company, to be honest. NIO has a lot of things going for them. One of those things is that NIO has a 25% equity stake in a battery asset management company. Battery asset management, according to NIO, is a 2 trillion RMB market. Obviously, NIO has a lot more going for them than just battery asset management. They have battery swapping, which will bring in revenue. They have the robo-taxi network that they're working on with Mobileye, which should bring in revenue. They have the charging stations, which CEO William Li said are already profitable. They have the collaboration with GAC NIO, which is going to sell cars to not the premium market, which will open them up to a broader market as well. Global expansion is also in the works, and they have the support of the Chinese government. There's many more pieces to the story than just cars. So you cannot value a company like NIO just as a car company. This is a company that's actually very hard to value because there's so many moving pieces. Not just electric vehicles, but smart electric vehicles is where the world is moving, and legacy automakers, makers of internal combustion engines have already invested so much into internal combustion engines for years to come. So it's going to be hard for them to just flip the switch, because just flipping the switch like that would cannibalize their existing customer base and burn their investment. So it's likely that pure electric vehicle companies will eat away at their market share, in my opinion. This is what we call disruption. There's going to be an evisceration of the traditional auto market as we know it, and the best product will win in the long run. Companies whose focus out of the gate is on the future already have a head start. So this is obviously my opinion, but for me, I'm not going to let short sellers shake me out of my position in NIO. As I've mentioned before, NIO is a volatile stock. I like the volatility because I can add to my position, and I'm not really looking to cash out on my investment for years to come. What Citron had to say, in my opinion, could be correct for the near term, but for the long term, it doesn't change my outlook on a company like NIO.